All right, so the new year is here, and you know what? The stock market is already telling us a pretty interesting story. Instead of kicking off 2026 with a big bang, the first week felt, well, it felt a little shaky, a little uncertain. So let's dive right into this cautious start and try to figure out what it might be telling us about the year ahead.
And you know the drill, but it's always important to say, this is all for educational purposes. It's definitely not financial advice. Remember, investing always comes with risk.
Okay, so here's how we're going to break this all down. First, we'll look at the kind of mixed welcome the market got. Then, we're going to try to decode what's going on in investors' heads. After that, we'll touch on how politics shook things up. And finally, we'll pull back and look at the bigger picture.
All right, let's jump into part one, that mixed market welcome. Yeah, this really wasn't a roaring start to the year. It was much more of a quiet, uncertain beginning.
So right away, you can see the market was kind of split down the middle. You had the Dow Jones and the S&P 500, the big broad slice of the US economy. They actually started the year in the green. But then you look at the NASDAQ, which is full of tech stocks, and it was getting hammered. What does that tell us? Well, it shows that investors weren't feeling confident about everything. They were clearly picking sides, favoring those big, established companies over the high-flying tech stocks right from day one.
And the real takeaway here is that even the gains we saw were, well, they were pretty tentative. Someone called it a warm-up rally, and I think that just hits the nail on the head. This wasn't some mad dash where everyone's buying up everything in sight. Nope. It feels more like the big money, the institutional investors, are just kind of sitting on the sidelines waiting for a clearer sign on where things are going with inflation and interest rates before they really jump into 2026.
So all of this really leads us to the bigger story, which is what's going on inside investors' minds right now, the psychology of the market. And when you look at the data, you can really see why so many people are playing defense.
Okay, first off, we've got to talk about something that didn't happen, the Santa Claus rally. You know the one. It's that historical trend where stocks tend to get a nice little bump at the end of December and the start of January. Well, for the third year in a row, Santa just didn't show up. And look, it's not a crystal ball or anything, but when it doesn't happen, it can make traders a little superstitious, a little nervous about what's coming next.
So, with no Santa rally in the books, you have to ask, right? What are traders watching now? And the answer is, well, it puts a ton of pressure on the entire month of January.
And that leads us straight to this old Wall Street saying called the January barometer. It's a theory that basically says, as January goes, so goes the year. Now, whether you actually buy into that or not, it has a massive psychological effect. A strong January could get everyone feeling confident again, but a weak one, that could just make all those worries from December feel very real.
In this chart, it shows you exactly where the money is going. It's what we call a classic defensive rotation. It's like investors are running for cover. You see huge chunks of cash flowing into sectors like utilities and energy, the stable, boring, dividend-paying companies. When people are buying those instead of flashy tech stocks, it sends a super clear signal. It says they're betting on slower economic growth, and they'd rather have safety than high-risk excitement. They're basically bracing for a slowdown.
Okay, so on top of all this economic jitters, guess what? Politics decided to throw a couple of major curveballs into the mix this week, and boy, did they create some instant waves.
First up was the tariff news. So former President Trump announced he was pausing some planned tariff hikes for a year, specifically on stuff like furniture and home goods. And the market's reaction? It was immediate. It makes sense, right? Tariffs mean higher costs, which eats into profits. So when you take that threat off the table, even for a little while, you give businesses certainty. And if there's one thing Wall Street absolutely loves, it's certainty. And boom, stocks like Wayfair and RH took off.
And then the second thing was a genuine geopolitical shock. I mean, reports started flying that the US had captured Venezuela's President Maduro. Now, why does that matter to the markets? Well, Venezuela is a huge oil producer, so any hint of major instability there sends shockwaves through the energy markets. And that's exactly what happened. Oil prices and energy stocks went wild, which is just a perfect reminder of how fast some global event can totally rock your portfolio.
All right, so let's zoom out a little bit and get some wider context here. Because even when the overall market feels kind of quiet and cautious, there are always fascinating stories happening just beneath the surface. And this is a fantastic example of that. While the big indexes were kind of just meh, individual companies were having a wild ride. You had Tesla dropping because of more fears about competition, but at the exact same time, you had chip companies like Micron and Western Digital climbing higher. all because there were signs that demand might be picking back up. The lesson here is pretty clear. Even when the market as a whole is just treading water, picking the right individual stocks can make a world of difference.
So what's up with this big number, 10,000? Well, while the US markets were being all cautious, something pretty huge was happening across the pond. For the first time in history, the UK's main stock index, the FTSE 100, crossed the 10,000-point mark. It's just a really powerful reminder that what's happening in the US isn't the only story. Global markets don't always move together, and right now, there's a totally different kind of momentum happening elsewhere.
You know, it's always good to have some perspective, so let's just rewind a little bit. Remember 2025? It also kicked off with a ton of uncertainty, and the middle of the year was super volatile because everyone was freaking out about interest rates. But how did it end? It actually turned out to be a pretty solid year for stocks overall. It just goes to show you that timeless lesson, right? Short-term drama is totally normal, and more often than not, staying invested through all that mess pays off in the end.
Okay, so let's wrap this up with the key things to remember from this first week. Number 1, 2026 started off with a really mixed, uncertain vibe. Number 2, investors are absolutely playing defense, moving their money into safer spots. 3, politics can and did create instant market reactions. And finally, the big lesson from last year still holds true. Keeping that long-term view is just so important.
And all of this really leaves us with the big unanswered question for the year, doesn't it? You've got fragile investor psychology, you've got politics throwing wrenches into the works, and you've got this split performance between different parts of the market. So, who's going to win 2026? Will it be the bulls who see opportunity, or the bears who see trouble ahead? The first week has definitely set the stage. Now, we just have to watch it all unfold.